Hello and welcome to this Edison audio interview with Joe Bauernfreund, the fund manager of AVI Global Trust, a UK listed investment trust, and also of a new Irish listed open-ended fund, the AVI Family Holding Companies Fund. I'm Sarah Godfrey. I'm a director in the investment companies research team at Edison, and it's Thursday, the 25th of February, 2021. Hello, Joe.
Good morning.
So can you tell us about AVI, the fund management company, and the types of things that you invest into?
Sure. Well, AVI was established in 1985, and its purpose when it was launched was to become the fund manager of an investment trust, which was then called British Empire Securities and was recently renamed AVI Global Trust. Today, that trust is over £1 billion in size, and it remains the largest client that we have within AVI. As far as our investment strategies go, the things that interest us tend to be areas of the market that are perhaps neglected and overlooked by other investors. So they're the less fashionable areas, the more inefficiently priced areas of the market. So some examples would include family-controlled holding companies, which are listed entities found around the world, as the name suggests, controlled by families, and they tend to trade at discounts to net asset value. So that's particularly interesting to us. Other areas include some closed-end funds that are perhaps mispriced, and from time to time, there are various areas around the world. Currently, Japan stands out to us as being areas where there are companies that are neglected and overlooked and hence mispriced.
Thank you. So family holding companies might not be a familiar area to many people. Can you tell us why they are an interesting asset class for you?
Yes, they are. They're interesting to us for a number of different reasons. Fundamentally, many of these family-controlled holding companies own high-quality assets. They've delivered long-term, strong performance, often performance that's a lot better than broader global markets. And in many cases, these families have been so-called wealthy for several generations. And when they invest, they have that very long-term perspective. They're interested in generational transfer of wealth, and that brings with it a maturity and a conservatism and a focus on quality cash flow generating businesses that we think is very attractive. At the same time, because this group of companies is perhaps less well known by other investors, less followed by research analysts, and less understood, and in some ways a little bit more complex than plain vanilla companies, they can trade at discounts to the value of their underlying businesses. And that creates a fundamental valuation attraction that we find appealing.
And that does sound interesting. Are these sorts of companies, are they names I would know? Are they in any particular geographical areas more than others?
Well, the interesting thing about family-controlled holding companies is that very often the actual listed holding company is not that well known. There are some that are more well known than others, of course. But very often, the underlying businesses that they own are well known. So, for example, in Italy, there's a family-controlled holding company called Exor, and Exor is controlled by the Agnelli family, who founded the Fiat car company many years ago. And today, that holding company contains not only the successor company of Fiat, Fiat Chrysler, which recently merged with Peugeot, but it also contains companies like Ferrari, has a stake in The Economist. And so those are companies that are well known. Another example would be in Sweden, where there's a company called Kinnevik that has a large stake in the leading European e-commerce retailer, Zalando. So often we find that these family-controlled holding companies, although they perhaps themselves are less well known, those underlying businesses are very well known, often very high quality, and often have will deliver and have delivered very strong growth for their shareholders over time. And we tend to find that holding companies are more popular and more prevalent in certain regions of the world. Europe is an area where there are a good number, but you should bear in mind, we're not talking about thousands. There are maybe a few hundred companies that we follow around the world that would fall under the category. So Europe is one area. Hong Kong and Singapore tends to be another area. And then there are some emerging markets such as India and Latin America, where you tend to find some family-controlled holding companies. Countries such as the UK and the US tend not to have that many family, if any at all, actually family-controlled holding companies.
Great. So you mentioned that they often tend to trade at a discount to the underlying value of, in what you've mentioned, some really well-known brands and companies. Are there things like this that one should watch out for when investing in these companies?
Yes, absolutely. I think the first thing to note is really in the name, in the description of these companies. These are family-controlled holding companies, which means that in essence, families are in control and other shareholders are minority shareholders and won't be able to force the company to do what they might want them to do. So one has to ensure that the family that is in control is acting in the interests of all shareholders and not only of the family. In other words, there has to be a kind of alignment of interest. Many companies, many family-controlled holding companies do operate in this way. They treat all shareholders equally despite the family control. But there have been examples over the years of some family-controlled holding companies acting primarily in the interest of the families. So we need to ensure ourselves that the track record of these families has been one that has created that alignment of interest rather than abused their position as dominant shareholders. So the things to look out for are transactions that take place between the family, private entities, and the public entity. At the same time, one has to also look at the quality of the management. Just because a family has generated wealth over generations doesn't mean that the current family members are good custodians of that wealth going forward. So you want to make sure that they are active owners of their businesses. They're acting in a way that makes strategic sense, that's likely to deliver value to shareholders, and that they don't have necessarily an emotional attachment to legacy and perhaps zombie kind of companies. So you're looking for some element of professionalism as well in that. And indeed, many family-controlled holding companies currently are run on a day-to-day basis by professional managers from outside of the family. So
can we look into perhaps the reasons why they're not valued in the stock market in the same way that that some other companies might be?
It's true that on average, many holding companies do trade at discounts, and hence that leads to your suggestion in your question that they don't trade in line with other companies in the stock market. But that's not always true. And what we've seen over the years is that from time to time, some companies come in and out of favor, and that gets reflected in the discount moves, and sometimes discounts disappear and premia emerge as well. So to think about the reasons why they're perhaps undervalued, a typical family-controlled holding company will own a portfolio of different businesses. It can range from 1 or 2 to more than 10 in some cases. And those businesses can be listed and can be unlisted. And when you add to that mix the fact that the research available and the information available on these companies isn't as extensive as some ordinary companies listed on the stock market, that creates a bit of an information dislocation. And so the lack of information leads to a lack of efficiency in pricing. So that's one reason why a discount exists. Other investors don't like the fact that these portfolios are diversified across different sectors, across different industries, and sometimes across different regions. They like to pick their allocations directly themselves and don't want somebody else's allocation. So that's another reason why people stay away from them. People don't like the family control. People want to have a say in the companies that they're invested in, don't want somebody else to have that say. So all of those reasons add to the kind of inefficiency and the reason why they trade sometimes at discounts.
Given that many global stock markets indices are trading at particularly high levels, would you say that now is a particularly good time to look at these family holding companies that might not be so highly valued?
Well, I would say that now is a good time to look at some family controlled holding companies, and I don't think we can categorize them all under the single banner of a sector and say that every single one is interesting. But when you look at the market environment over the last 10 plus years, you've seen a number of relevant factors here. So you've seen the growth of passives. You've seen a lot of capital being allocated towards high growth areas of the market, particularly technology stocks in the US and in China, biotechnology stocks. And that has led to a lack of interest in other areas of the market. And family controlled holding companies would fall into that category. And so the fact that some pockets of the market appear to be overvalued whilst others have been left behind suggests that there are opportunities within those neglected areas. And I would say that some family controlled holding companies would come under that category. And the fact that they own high quality businesses and they've got strong balance sheets and they trade at attractive valuations is appealing and makes them worth a second look at currently.
Thank you. That all sounds really interesting. Now, Edison doesn't currently produce any research on AVI's funds, so anyone who did want to find out more should probably go to AVI's website, where there's information on all of the funds, and you can find that at www.assetvalueinvestors.com. So Joe, I'd just like to say thanks very much for talking to us today. It's been really interesting to find out about what you're doing.
That's my pleasure. And thank you for taking the time to talk to me.
Thank you. So you've been listening to Joe Bauernfreund from Asset Value Investors, AVI, and I've been Sarah Godby from Edison. Thanks very much for listening. Goodbye.